When it comes to getting your feet wet in the investment pool, there's quite a bit to unpack. On one hand, you've got brokerage accounts or IRAs, and on the other, there's the simpler high-yield savings accounts. Let's dive in. Brokerage accounts and IRAs. Investing in the stock market through brokerage accounts or individual retirement accounts, IRAs, can feel like being handed the controls to a slightly older and more temperamental spacecraft. You get to pilot your investments, choose individual stocks, mutual funds, bonds, ETFs, the works. It's a hands-on approach. Now, IRAs come in two flavors. Traditional IRAs give you a tax break right up front, but you'll pay taxes when you withdraw in retirement. Roth IRAs, on the flip side, don't give an upfront tax break, but the withdrawals during retirement are tax-free. Consider them a sort of delayed gratification. In Portland, we're used to planning ahead. After all, our rainy season isn't just weather, it's a state of mind. So playing the long game with an IRA lines up pretty well with our local ethos. Both of these account types expose you to more risk, sure, but also to the potential for greater returns. Historically, the stock market has enjoyed an average annual return of about 7%, adjusted for inflation. It's like betting on the Trailblazers. You might not win every game, but historically, you stand a decent chance of coming out ahead over the long haul. High-yield savings accounts. Compare that now to the less exciting but steady high-yield savings accounts. They're the thick, dependable rain jackets of financial tools. You're not going to get rich off the interest by any means, but your money isn't likely to get lost in the downpour of a market downturn either. These accounts offer better interest rates compared to traditional savings accounts. Think of them as the Powell's books of the savings world. They might not be as flashy as the latest tech gadget, but they offer a wealth of value and reliability. Still, in an era of relatively low interest rates, high yield isn't quite as mighty as it sounds. So what's the verdict? If you're all about that serene, steady stroll through Laurelhurst Park, a high-yield savings account could be your speed. It's safe, predictable, and you'll sleep well at night knowing your money isn't going anywhere. On the other hand, if you're in for a more thrilling ride down the Willamette, financially speaking, and you're okay with the ups and downs that come with it, then the brokerage account or IRA could be your vessel of choice. Like any Portlander knows, the best approach often involves layers. Don't put all your eggs in one basket. A blend of investment vehicles might just be the savviest move. Layer up with a mix of high-yield savings for your emergency fund, while also exploring the promising, if not more rugged, terrain of the stock market through a brokerage account or IRA. After all, diversifying your portfolio is a lot like keeping both hiking boots and a good book close at hand. Each serves its purpose when the time is right.